Hello, guys. Welcome to the first episode of Upshore podcast. Today we have our founder, Dr. Nandagopal. Hi, Nandagopal. How are you?
Fine, thank you. Good.
So today, this podcast, we are talking about your journey, sir. Your journey, how you started this Upshore as a brand, what are the challenges that you faced, and what sort of technology that you included in Upshore.
Well, I'll first start with how offshore as an idea has actually came up in my mind. This is something to do with the COVID. During the COVID, we have seen that most of the insurance companies actually the staff are working from home and they're not able to service their customers. And so we thought that it's important for insurance companies to be available always 24/7. And for that, it is important to have both the back end and the front end services to be completely online and digitized. So the upshore is actually an idea that has come up during the lockdown. But prior to that, when I was actually working in the insurance companies, I always had an opportunity of understanding technology and how technology can actually empower the insurance companies to do something much better in a much more different manner. So in that sense, the whole idea of upshore, the design part of it took much longer time, and maybe it took about 2 to 3 stand of a time before we started working on this. But COVID has actually completely accelerated the whole thing. In terms of the design of Upshore, it is the world's first unified Omni insurance platform. When I say it's unified Omni insurance platform, you have seen that there are companies who sell policies online, which is what we call a front end solution. There are companies which actually provide back-end solutions, but there is no one single unified customer journey which integrates both the front end and back end into one single solution. Ours is that way, completely vertically integrated function wise. So in insurance companies, usually we have different functions, like you have policy administration, you have customer relations, you have customer services, you have channel management, you have product management, you have underwriting, and each company, each function sometimes is powered by one single solution. So companies end up with multiple solutions. Integrating all of them into one single platform becomes a challenge. So we thought that instead of having silos which are necessarily something which the insurance companies have designed to match their own convenience, but not necessarily customer centric.
Exactly.
So why not we actually think customer is the center of the whole business? So what does a customer do when he's coming to an insurance company? He pays premium and he expects a claim to be paid. So in that kind of a situation, why don't we actually design all the systems from a customer perspective and merge the entire functions into one single platform? Which of course is very easy to say, but when it comes to the business side, it is still, there are specialists who are working on the sales side, there are specialists who are working on the underwriting side. So you need to really give them interfaces which are some sort of a platform for them to work on that. But the front end should look like a unified platform. So that is what the design concept is. It's based on the microservices event-driven architecture.
And I saw your journey from initially. I know your past experience at a very big companies that you work. Tell me about your journey, sir. Like where you started and what sort of companies that you built.
I worked in the insurance industry for many years, but in the life insurance side, my first assignment in the life insurance side is with Aditya Birla Sun Life Insurance Company. Then I moved to Reliance Nippon Life Insurance as a managing director, and then I moved to India First Life Insurance as a managing director. And in all these three companies, I had an opportunity of working very closely with the technology. That's how
This entire Upshore started.
entire Upshore idea has started.
And how this entire insurance sector is opened up for a corporate companies or corporate companies?
Oh, that's a very long story. It's almost like 25 years now. If I remember correct, in the year 1999, the government has passed a new legislation called the Insurance Development Regulatory Authority Act. And that is the beginning of the journey of the private sector into the insurance. Though private sector existed long time back, but government nationalized in the 70s, and then thereafter the industry was thrown open only when the IRDA has come into existence. So the early, it's almost like 25 years now. Within the last 25 years, the now about 50 companies, insurance
Yeah,
companies,
yeah.
which have been set up. So it's a very long, interesting journey.
What are the biggest challenges that you faced or when you are setting up the upshore, as well as some of the insurance companies are there, right? What are the biggest challenges they will also face, sir?
Not only for me, but for everyone in India, because such a large country, the
Correct.
challenge is always distribution. How do you distribute in a very cost-effective manner to the millions of the people who underinsured or uninsured? So
Hmm.
that's always a challenge, especially for a new insurance company when it is trying to come into the market and trying to sell its plans. And how will customer come to know about them?
Correct.
So you have to have a very customer-friendly, accessible, affordable distribution channel. That's the main challenge. But while the distribution is a challenge, to empower the distribution to really support them with all the kinds of CRM tools and all that, you need a right technology platform. So I think that if you have the right distribution, right technology, it's very easy to sell your
Okay, so
products.
we are in India. In India, like everyone says, there's a new rules and regulations will come in the industry. In the insurance industry, also, there's a lot of rules and regulation will come in years and years. So, how do you adopt that new rules and regulations in our company to grow?
Yes, it is true that the regulations always change, not
Yeah.
necessarily in insurance, but even in banking and
Yes.
stock market, they continuously change because the market trends, they keep on changing. So the regulators have to keep up with the markets to bring them in new rules. Essentially, the purpose of rules are the consumer protection.
Correct.
So if you have to protect the customers, then you need to really keep on changing the rules. From the business side, I do not think that change in rules is a challenge, because every rule tries to create a situation which is slightly better for the customer, better for the industry. That's the purpose of the rule. But where the challenge comes is when your backend systems are not in a position to
Hmm.
adopt the change, because you have got monolith systems, monolith processes,
Hmm.
and customer your internal staff mindset is not very conducive sometimes, to adapt to the new environment.
Correct.
That's the problem where the real challenges arise. So for that, you need to have the right kind of mindset, right kind of a system. And thankfully in that way, Upshore is a very agile and very modular kind of a platform where, if any rule changes, we can change it in hours, if not in minutes. For example, I'll just give you one
Hmm.
interesting example where during the COVID, the customers were until then were asked some kind of a questions.
Correct.
But during the COVID, the insurance companies added a COVID questionnaire where you have to ask additional questions whether you have
Are
been
we
infected
COVID or
or
not?
not, you have been
Yes.
vaccinated, and stuff like that. And to add those questions in the system, maybe it would have taken a lot of time. But in our system, it will actually happen in minutes and hours. So if you have that kind of system, adapting to the rules and regulations are not a challenge.
Correct. And if you see, the lot of companies are there. They are going on the digital insurance or something. Can you tell me why people and the companies need to shift to a digital insurance?
Essentially, two things. One is
Okay.
that the customer is moving to the digital. If the
Exactly.
customer is not moving to the digital, and if
Hmm.
he's still, really comfortable with the old-fashioned way,
Okay.
then maybe the companies would stay that way only. But
Correct.
the customer is asking that everything has to happen in minutes and seconds.
Correct.
Previously, customer was happy if the policy is sent to him after 30 days, but now he's not at all happy. He's asking for the policy to come immediately within minutes.
Hmm.
So
True.
one is the customer expectations. Second thing is the digital creates a huge cost efficiencies at the back end also. Even if customer is not asking for a digital experience, there is a strong reason for the insurance companies to go digital, because if you are completely digitizing your entire back end operations, the companies can save up to 30% of their OPEX.
So you wrote a life insurance development plan, right? So, and can you tell me about that?
Oh, okay, fine. When actually the industry has got a body called Life Insurance Council, so all the CEOs are members of that particular Life Insurance Council. So we were deliberating that a new decade is going to come, 2011 to 2021.
21.
So how the industry is going to look like? So they deliberated, and the mandate has come to me to author that particular plan, taken the inputs from the entire industry, collate them, and then discuss and then fine tune the whole plan. So the plan is essentially to overcome the challenges that are going to be posed to the industry in future. But in retrospective, now it's already 2024. So most of the uh, points which we have raised and deliberated and discussed during that particular period are now becoming a reality.
Correct.
One of the most important things at the time we discussed is that how the industry should actually uh, grow in a much more cost-efficient manner, leveraging multiple channels of distribution, create new distribution channels, leverage technology. So all those things are becoming eminently relevant now.
Yeah. So, as an industry leader, as an industry and insurance council member, what are the rules that can impact the entire future, sir?
I'm no longer an insurance council member because I moved out of the industry and set up my own insurance firm, my own insurance technology firm.
Hmm.
But the industry body, Life Insurance Council, essentially works as a coordinating body among all the insurance companies, CEOs, and the thought leaders to negotiate, coordinate policy making at the government side as well as at the regulator side. So that is the essential job of the Life Insurance Council. But more than that, it is also an opportunity for the industry leaders to come together and then discuss their opportunities and challenges in a very candid manner once in a month. That's the purpose of the council.
Great, great, sir. And in terms of upshore, sir, which are the regions that you are focusing more to develop a digital insurance? You are only focused towards India or any other regions that you guys are focusing?
See, interestingly, technology is a global
Correct. True.
phenomenon. It's not the kind of platform what we developed is universally relevant.
Okay.
So we actually started our journey in a smaller way from US, but then we started refocusing on India because suddenly so much of so many things are good things are happening in the insurance side. The Indian insurance regulator is being very particular that or the insurance companies should penetrate more and then service the customers in a much more efficient manner. So because of that, the digital insurance as a concept has taken a very strong roots in India. So we refocused in India. India is one of the biggest markets for the insurance as
Insurance
well as
segment.
the
Correct.
insurance technology. So that's our focus area. But while India appears to be the one that we also moved into the GCC countries, the Middle
Okay.
East. So we have presence in the Middle East as well as now we are planning to move into Japan and we are moving to the Asia Pacific region, Europe also. And so this is we don't have any specific bias towards any region. We
Hmm.
believe that it will work everywhere. But in terms of the business opportunity, India is one of the largest opportunities. The Asia Pacific is another largest opportunity. Middle East is the third largest opportunity. Europe and US are really big markets. We are working with our partners
Hmm.
to enter that market, but those markets are also very mature, so they'll take much more longer time to adapt themselves to a new transformational technology like upshore.
So, I mean, you worked with the different regions also, right? Which region has a less rules and regulations to enter into that market?
No, I think insurance is always well regulated. I don't
Oh,
think that
okay.
any other particular region
Hmm.
is lax or liberal in that way. In fact, when you are not having sufficient regulatory regime, then I think that market is not necessarily the right one for the customer. So I believe that insurance must be well regulated. In that way, almost all the regulators in the world, in fact, they also have an interactive body where they'll talk to each other and then they follow each other's regulations. So my guess is that almost all the insurance companies, insurance markets have their similar rules. There is not much of a difference between them.
Okay. And if you see the India population, and only a few percentage are taking this insurance, right, compared to other countries, and other countries are taking this insurance, and coming to India, very less percentages are there. Can you tell me what is the reason, and we are not doing it in like a kind of a promotion or awareness to our audience or customers who's taking a life insurance?
I think the penetration is definitely low in India.
Mm.
The global average is about 7%, and we are not even half of that. We are at 3% now. Some of the countries like Japan and all that have about 11% of penetration.
Mm.
So, why the penetration is low is for two reasons. One is that, as a priority area, most of the people may prefer to first save for their other livelihood needs and all that. So insurance may come little bit
The
later.
secondary or third option.
And then we also had culturally also some kind of a support system like joint family and all that, where in case of some untoward event, the joint family members always came to the rescue of the person who suffered a financial loss. So this kind of a cultural reasons also one of the causes why the penetration is low. But while that some sort of a challenge existed, the real problem now, how to solve this kind of a penetration thing, is also rests with the burden of solving that problem rests with the insurance industry. If the insurance industry produces much more customer friendly plans, like you have seen that banking has become now virtually universal. People are now almost everybody is using banking because of UPI.
Correct. True.
Like that, if you make it very super simple for the insurance to buy and then to lodge a claim, if you make that as simple as that, then obviously people will tend to use it much
Exactly.
more. That's one thing. The other thing is also cost factors. There is no reason for the insurance companies to charge a higher premium because their expenses are higher, their operating costs are more, their distribution channels charge more. Because of that, the cost of premium the
Will
insurance
be higher.
companies is very high. But if you reduce that without reducing the distribution capabilities, you can always reduce the OPEX by leveraging technology. If you can do that, your total cost can come down by 30%. We have run some kind of experiments where we have seen that, if you completely transform the manual process to the
To a
digital
digital
process,
platform. Mm.
your customer cost can come down by 30%.
Oh wow.
So
Okay.
that is a substantial drop in the price. And if you do that, then the penetration will increase also.
Okay. So I have a bunny normal layman question, sir. Why every company, insurance company, has a different premium rate, sir? Like how they fix the costing?
Oh, that's an interesting question. First, the insurance companies have different risk appetites. For
Okay.
example, a large company like LSE,
Mm.
because it's a very, very large company, they may always have a capacity to absorb a little bit of losses, so they will go very aggressive in pricing. I'm just giving a
Example.
hypothetical
Okay.
example, not necessarily exactly the rates of LSE versus others. I'm not talking about that. But the fact is, that any large company will have an opportunity because they'll also have scale of operations. When you have scale of operations, your fixed costs will get spread across millions of policyholders. So ultimately, your premiums can be lesser.
Correct.
But a small company which is focused in a specific market, they may have a less risk appetite.
Mm.
So they may charge slightly higher premium. That is one reason. The scale of operations determines your cost structure and also your premiums. The second one that actually, sometimes you also see when there is premium rates change, is policies are not really apples to apples.
Mm.
While they may appear to a person that they are similar, they are not exactly same. There
Okay.
are so many smaller benefits which one policy will have it. For that, the customer need to be charged. So that is the another second reason. In fact, while you may, as a layperson, think that all the life insurance policies are same, or all health insurance policies are same, they're never really same.
Yeah, but as a common person, I'm saying like a lot of people will don't know this thing. So when I see see this tariff or something, they see a life insurance, this is a premium, and as a health insurance, this is a premium. How the person will get to know these other small things are there?
Yeah, that is one person. I think the digital technology can actually solve.
Okay.
The most of the digital platforms now, you are familiar with Policy Bazaar,
Yeah.
and then several other digital platforms are there, and they'll give you a very good comparison of what are the benefits, what are the terms, what are the pricing, what are the other conditions attached to that. And then, so if the customer spends about 3 to 4 minutes, he'll be able to see. For example, our platforms, we give digital platforms to some of these distributors, and
Okay.
our platforms are used by several large distributors like IDFC First Bank, Marsh, and all. So when you use the platform will completely simplify those 30 to 40 pages policy document into some simple highlights, and then
Exactly.
ultimately you don't have to read the entire thing. You need to see what are the top 10 benefits or top 10 conditions. So there you have to compare it. So all this is possible now with the digital technology. So they'll give you automatically based on your risk profile, based on your age, gender, and all that, the right kind of plan. Recommendations engines are also built into our platform. So by using a simple data points, then we can automatically tell you that this particular plan is good for you, whereas the other plan is good for somebody else.
Correct. So in terms of competitors, you have a different competitors, right? What exactly make you as a standout compared to your competitors, sir?
See, we're an InsurTech platform.
Mm,
As a platform, as a positioning, we are the, as I mentioned to you, we are the world's first unified Omni insurance platform.
mm,
That doesn't mean that, I mean, we don't have competition. We have serious competition. We have three types of competitors essentially. One is the very large established players like Microsoft, I mean, SAP, or
correct.
maybe Oracle, and some of them, I mean, they do have, I mean, insurance platforms, and that is super large companies. The second type of companies are the people who build platforms for the customers like TCS, Infosys, Wipro, Cognizant, and these are the companies who actually have the capacity and the resources to build customized platforms, insurance platforms for the insurance companies. The second, third kind of people are the startups like us, I mean, who think of a new idea and then address that very sharply. But in each one of them, I mean, there are certain kind of gaps. And ours is, for example, if you are looking at super large players, their platforms are monolith platforms.
Mm,
That
mm,
means you can't really pick and choose what you want, and then you can't really address one small use case. You have to invest millions and millions of dollars to buy that and then implement that. It is a very very long process. That is the problem with the large companies. Whereas startups, I mean, they address a very small use case.
mm,
So while insurance is a bundle of problems, then if you are buying one particular software to address each small use case, then you will end up, I mean, having dozens and dozens of solutions, and to integrate all of them together is another problem. So whereas ours
exactly.
is, it is a bundle of solutions. You can take it as a bundle, or you
Or
can
a
take it as a
individual
piece.
service.
So it addresses both the needs, and that way we try to compete. But other way, I mean, we are not necessarily a big player to say that these are my competitors and all that. The market is big enough for everybody to have their own niche share.
Great, sir. So in terms of future of digital insurance or the digital platforms, how do you see, sir, for next 25 years of the entire industry will change?
Oh, it will change dramatically.
Okay.
It will not change. It will not remain this way. In
Okay.
fact, it will change so fast
Mm,
before we actually start adapting to the digital platforms. The new wave of digital platforms will come. The current digital platforms are integrating the older systems into one unified platform using data points
correct.
and give you some kind of analytics. That is the, let us say, maybe that is a second phase of the insurance technology. But very soon, within 3 years, the AI will come and then completely will change. It
Mm,
will change so fast, and people will not even have an opportunity to think that, I mean, how we have missed out the bus. I mean, so if you don't really at least be ready to adapt to the new AI and ML thing, then it will become a major problem. So where does the change will occur? The change will always occur from the customer side,
mm,
because what you do at the back end is not necessarily something visible to the customer and to the market, and customer is not that much bothered. So where does the change occur is every customer facing interaction will change. For example, today you want to buy a policy for your car. I mean, you perhaps will go to the agent, or you go to the broker, or you bank, or maybe policy bazaar or something like that, and then you check it up and you enter the data, and then after submission of your document, driving license, whatever it is, you'll get the policy. It need not be that way.
mm,
Tomorrow there'll be one chatbot. You'll just open up and then you talk. I want to buy a car policy. I own a BMW, and this is the car I bought. And you don't even have to say that you have got a BMW. You don't even have to say that when you bought. Automatically, it
automatically it
picks
will
it up
pick
the
up.
data
Exactly.
and say, this is the car when you have it, and this is the premium. Would you like to buy it from company A or company B? And then you say yes. Then that's it. I mean, before you actually switch off the phone, the policy can be there in your. That is the kind of technology that will come. And
Oh.
so is the case with the claims also. When you have a claim, even before you reach the garage, for servicing. Somebody else will actually say that this is
This
a
guy
check.
is
Your car has suffered this kind of a damage, and take it, and something like will happen. And for that, the industry has to be ready by transforming the processes, transforming the thinking first. If you transform your thinking, then your processes will change, your systems will change. But the most important challenge is always the human challenge.
Mm.
How do you start thinking new? That if it happens, then everything else will follow.
Increasing of this technology will also have some disadvantages because of there's a lot of scams are happening in the current generation or current last 2 years. There's a lot of scams are happening because of the technology. The increasing of the technology will also increase in the scams, right? What sort of impact, what sort of regulations that government needs to bring?
I must tell you that the insurance industry is always guilty of several frauds and
Okay.
problems, not necessarily due to technology. Even very normal fraud people know about it is in case of claims, there used to be fraud, premium collection, there used to be fraud. And so if there is money,
There's always a
there
negative.
is always a problem that somebody else would like to steal the money in an unfair manner. That is the problem. But I don't think that the digital technology will actually enhance the fraud quotient. It will actually reduce it further,
Okay.
because your digital technology, if you use it properly, you will have one single view of what's happening everywhere else.
Hmm.
For example, our upshore platform is a virtual office where, looking at the whole country, if you deploy this, then you will have a dashboard which exactly tells you who's doing what, and you will
Hmm.
be in position to set up auto alerts, and
Wow.
you'll be able to put it up a fraud monitoring tools. You can deploy that, and even manually you will not be able to come to know, because something happened, and maybe by end of the day or maybe end of the week or month you will come to know that fraud is occurred. But this can happen in real time,
Hmm.
and not only after the event has happened, predictively also we can guess what is going to. Suppose some agent is prone to really missell the policies, we'll be able to red flag him much before actually the event has occurred. So technology will reduce the frauds eventually, but yes, there are certain risks, especially if your passwords are
Shared with
shared with
someone.
somebody. If you don't, you are not careful about with whom you actually share those information, that kind of thing. There may be problems, but these are all things that can be easily addressed.
Yeah, I have another question. So, what is the major difference between Policy Bazaar and Upshore platform?
Policy Bazaar is a B2C platform. That means they tie up with insurance companies on the business side, and they directly offer the insurance companies plans to the customers through a comparison web aggregating platform. That is their business. So in that sense, they're actually serving as a broker,
Hmm.
as an
Okay.
intermediary between the insurance companies and
And the
the
customers.
customers. Whereas ours is a B2B platform. That
Okay.
means I am not an insurance broker. I don't want to distribute the insurance products and earn commission. But if somebody is actually in that business of distribution, we facilitate them to by offering our technology platform, so they don't have to necessarily, create their own platforms, or try to work
Work on the
around in a
development
manual
side and
process and
yeah.
all that. So they take our platform and then white label it, and then they'll provide that. So our platforms are also, in another way, they are multi-channel. They are
Hmm.
not only for the direct to customer online, they are also for banks.
Hmm.
Large banks use our platform for bank assurance. So for the banks, agents, then web aggregators, multiple channels can use our platform. So these
Okay.
are the key differences.
How this insurance are useful for the youngsters? So currently, the people right now, people have a lot of knowledge and they're investing in mutual funds and all. How this insurance is useful for them?
It's very, very important for youngsters,
Okay.
because youngsters, unlike their previous generation of their parents and grandparents, their habit of savings have become now less, because because of the consumerism that has come in this country. The people tend to blow up their money, whatever the money which they are earning. They're actually earning more than their fathers and
Correct.
grandfathers, but they're spending more money also. On the other hand, once they get used to the habit of saving regularly, which a life insurance plan will actually help them to, develop that kind of a habit. So it is important for youngsters more than the
Fathers.
more than the middle-aged people and all that to get into the habit of regular savings.
Correct.
Life insurance helps them that. The second thing is, if you are buying insurance early in your age as compared to later in the age, your premiums are lower.
Hmm.
So automatically, because your health condition is better, that you are in a position to buy plans at a lower premium. So it is always advisable for the youngsters to start early, save regularly, and then think long term.
Okay, so I have a personal doubt, sir, on this. What is major difference between life insurance and term insurance?
See, life insurance includes term insurance as well as savings plans.
Okay.
If there is an untoward event of a death,
Hmm.
if the benefit comes to the policyholder only in such kind of circumstance, that is called a term insurance.
Hmm.
But in case of a savings plan, even if the death does not happen, the policyholder survives the maturity period of the plan. Then the money comes back, I mean, as a maturity benefit.
Okay.
Those are the savings plans. So term insurance plans cover only the death
Death
part
part.
of it, death risk,
Okay.
whereas the normal savings plans cover death as well as the other risk of living
Oh,
too long.
okay.
In fact, some of you perhaps may not even understand the real risk is not dying too young. The real risk is living too long. If people live too long without having
Financial support.
regular income coming into their bank accounts, then it will become a problem. And India right now, of course, is a very young country demographically, but very soon, I mean, we'll have very older people there. So it is important, I mean, to have savings plans also, not just only mere term plans, so that it will cover both sides of risk, dying too young or living too long.
Do you think all these companies, insurance companies, are promoting this insurance up to the mark?
I think everybody is trying to do their own bit. Each company will have their own policy of marketing and distribution thing.
Hmm.
But yes, of course, there is always scope for improvement.
Why government is not putting health insurance as a mandatory thing?
See, I always believe that the best things always will happen when you don't mandate them.
Okay. Okay. Good one.
Because if you mandate them, suddenly it becomes like a duty and then some sort of a restriction. There is a aversion comes. Maybe what is mandated, maybe a minimum level of health insurance, people buy only that.
Hmm.
On the other hand, if you are well educated and well aware of that, your level of insurance should always be commensurate to the kind of risk which you exposed to. So I believe that by merely mandating, you will not be able to change the problem of underpenetration. It is a multi-dimensional problem. So I don't really believe in mandating for health insurance.
Okay. As a youngsters like me, can you tell me financial planning using insurance policies?
Yes, see, an insurance plan, you may say, is a ready-made financial plan.
Hmm.
If you enter into the life insurance plan, I mean, let's say at the age of 30, 35,
Hmm.
then you should actually have at least, I mean, until you reach the age of 60, you should have a plan that is for the next 20, 25 years, you need to have an insurance plan. In 20, 25 years, there are a lot of lifetime events will happen. These lifetime events providing money for that is what we call a financial plan.
Correct.
So what are those lifetime events that may happen? You may have children, the children will most likely go for college education, then
And the marriage.
maybe you'll have to get them married, you yourself wanted to go on a holiday, or you want to move
Correct.
from a normal apartment to maybe a bigger apartment, you want to buy a bigger car. These are all the lifetime needs you will have it in the next 20 years, for which you need to have money. But money will not come just in the time when you are actually thinking of that particular need. You need to keep saving for that, and that's the how you will save it. If you are saving through stock market, suddenly the market crashes at the time when you have financial need, then suddenly you don't know what to do. Whereas in case of life insurance, is a very steady savings. They may not give you an extraordinarily higher return, but they'll
Hmm.
give you very stable, steady,
Stable.
regular returns. So, and another part of it is you will not be able to withdraw the money from the insurance plan as and when you want, just like a bank account.
Correct.
Whenever you want, I mean, such kind of a short term needs, maybe mutual funds are the right vehicle, or maybe the bank accounts are the right vehicle. But for long term savings, where you should not have that kind of a complete freedom to withdraw it, so that they will be really utilized only for specific financial needs, insurance is the best thing.
Okay. As a youngsters, what are the three policies that we need to take?
I think everybody should cover themselves first for health risk.
Okay.
People may think that when you are young, I mean, maybe you will be in the pink of health,
Hmm.
which is true. But
Hmm.
the cost of health insurance, healthcare is so high, then you need to really cover yourself against the rise in medical costs. So health
Correct.
insurance is the first one. Second thing is, if you have encumbrances, like you're married and then you have children, then you need to have a life insurance plan, definitely.
Okay.
And the life insurance should cover not only in case of any untoward event, but it should also help you to really save regularly. Third thing, maybe a very specialized pension plan, because grown people are going to live very longer. While the organic life is increasing, the working lives are getting shorter. So in that kind of a situation, there'll be a time when people will be living, but they'll be requiring money because there'll not be any employment, and most of the people nowadays, youngsters, are working in private sector. Private sector doesn't have any kind of pension plans, so you need to have your own pension plan. So I strongly recommend that you should have health insurance, you should have life insurance, you should have pension plans.
Wow, this will very useful, sir. Okay, so one last question that I have, sir. Upshore, how is useful for your end customers?
See, my end customers are people who are buying insurance
Insurance
plans,
policies,
though
yes.
our immediate clients are the companies, insurance companies, and the large distributors. See, the end customers, if they are able to buy a plan very easily,
Mhm.
if they are able to buy the plan at a lesser cost than what they'll otherwise get it from elsewhere, and if they're able to get their claim settled pretty fast, these are the three
Oh,
important use cases which we'll always focus on. That
okay.
you should be able to buy a plan very fast. You should be able to actually get it serviced, in case of any change in the plan and all that, pretty fast, and your claim should get instantly paid, or maybe near instantly paid. These are the three use cases the customer always expects. Apart from that, of course, it should be all available at a much cheaper
Cheaper
cost.
price.
Upshore facilitates on all these fronts.
Wow.
It helps you to get the plans online in minutes,
Mm.
and any service and request which you have it, if your insurance company is using our platform, you can do it yourself, your own service requests, or you can get it done pretty fast. Your claims can be accelerated, and the cost of overall insurance can actually come down by nearly 30%. So that's the kind of a benefit that we can offer to the end customer,
Wow. Okay.
provided the insurance companies and the distributors get fully digitized and use our platforms.
Thank you so much, sir, for joining our first Upshore podcast. Can you give me a one important note to our audience who are seeing this entire podcast?
Well, if you ask me, before you buy your car or before you go for a new apartment, first take insurance.
Okay.
And that's the most important investment you have to make it.
Okay.
And if you do that, everything else will fall in place, because first you should cover your risks,
Mm.
then only you should go for your other needs in the family. So my suggestion is always get yourself insured fully digitally through Upshore.
Great, sir. Thank you so much. Thank you so much,
Thank
sir. Thank you so much, guys. Thank you so much for watching an entire podcast. Every month, we'll come up with a one industry leader in our Upshore platform. Please watch, and share, and subscribe. Thank you so much. Bye.